Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. A defiant Vladimir Putin accuses the West of inciting a global war to destroy Russia, pulls back from its nuclear arms treaty with the US, says Russia will carry out new nuclear tests if America does so. US President Biden meets NATO allies in Poland. The Met Department sounds the alarm over above normal temperatures in large parts of northwest India. Delhi records its third hottest February since 1969. The Met says that unusually high daytime temperatures could impact crops in Punjab, Haryana and Rajasthan. The government invokes emergency powers, asks imported coal-based power plants to run at full capacity for 3 months from the 15th of March and sell surplus power to exchanges. The move comes as India is expected to see peak power demand in April. The order implies that at least 15 plants will have to operate at full capacity. Markets see a range-bound session end mildly in the red. Sources say that the NSE is in preliminary talks to extend trading hours for the derivatives market. Exchanges are of the view that current trading hours are pushing volumes offshore. Adani stocks continue to decline, with the group losing nearly 20,000 crore rupees in market capitalization today. Adani Total Gas, Adani Transmission and Adani Green have hit the lower circuit more than 10 times since the Hindenburg report. The group has now lost more than 11 lakh crore rupees in market cap. G20 finance ministers joined statement to strongly condemn the war in Ukraine when they meet in Bengaluru, but may not name Russia. The ministerial declaration will call for urgency in addressing debt vulnerabilities and strengthening multilateral development banks to deal with transboundary challenges and catalyze private investment. India and Singapore linked their online payment systems to facilitate cross-border transfers. Prime Minister Modi and a Singaporean counterpart were present at the virtual launch event. India's UPI and Singapore's Pay Now users can transfer money using only a mobile phone number or an ID. No relief for the people of Turkey and Syria. Another earthquake of 6.3 magnitude jolts border regions, killing 6 so far, injuring hundreds. Fears of more tremors keep people away from buildings. The chief of the World Health Organization says the situation in the two countries is concerning. Entry-level mobile recharge tariffs see a sharp jump of 340% in the last 3 years. Bharti Airtel's prepaid plan, priced at 35 rupees in December 2019, now costs 55 rupees. But that's not the same for higher price plans that have only seen 2 tariff hikes in the last 3 years. And on the show, a special report on how a lower allocation towards the MNREGA is worrying rural workers. They believe it will lead to suppression of employment demand and also push existing issues with the program into a corner. Well, the top story this evening, a defiant Vladimir Putin has blamed the West for inciting the Ukraine war, saying it was the West that was encouraging Ukraine to attack Russia. Putin's long televised address comes a day after President Biden's unscheduled Kyiv visit and ahead of the 1-year anniversary of the war. Putin has also announced his plans to withdraw from New START, the last major remaining nuclear arms control treaty with America. Ukraine has said that Putin's speech has demonstrated his irrelevance and confusion. US President Joe Biden is in Poland to discuss with NATO allies the ways of strengthening the military alliance's eastern flank. He's also holding talks with his Polish counterpart. Last year, Biden ceded to Poland's request for a permanent US base on its territory. Our colleague Sanjay Suri is in Kharkiv. He joins us with more on Putin's tirade against the West. Sanjay.
So this speech from Putin along entirely predictable lines. He does not say who it is that led this invasion. Which is the country that invaded? It is Russia on his orders here in Kharkiv. Look at this building here behind, destroyed, people living here killed, and hundreds of such buildings in Kharkiv destroyed, hundreds and thousands of buildings all around Ukraine. People have been killed in this invasion and in these missile attacks that have been raining down on Ukraine ever since. It is Putin who has ordered this. He says that it is the Nazis in Ukraine that are responsible, but really these are scenes reminiscent of the kind of damage and destruction caused by Nazis in the Second World War. It is not Ukraine, after all, that invaded Russia. We are not standing here inside Russia looking at this kind of devastation. Again, there is a great deal of cliche in what Putin says. He says Western elites are responsible. Of course, the Western elites are responding to Ukraine's need in the face of such attacks, in the face of such destruction. This is again a signal, though, from Putin that he is not going to stop, he's not going to let go. He says that it is impossible to defeat Russia in the battlefield. Well, we don't know what's to come, but so far that has not been the case. Russians have been pushed back from Kiev, from here in Kharkiv, from Kherson down south. Even in the Donbas region, it is the Russians that are on the back foot now. They're seeking to advance, but not able to advance very effectively, not very far, certainly not very fast. This is a speech that is not significant for the content of it. It simply doesn't add up. But what does matter here is that we have a signal now from Putin that this war is not going to end in a hurry. Ukraine certainly is not going to stop defending itself. And if the Russians continue attacking, as Putin has said that they will and has indicated that they will, this war is going to go on for a very long time.
Sanjay Suri, many thanks for joining us there from Kharkiv in Ukraine. Now, summer seems to have arrived earlier than expected in many parts of India as temperatures soar across states. The weather department has warned of rising temperatures over the northwest, parts of Maharashtra, Goa and Gujarat. Now, speaking to CNBC-TV18, the IMD scientist R.K. Janmani said the temperatures are likely to be above normal by 3 degrees Celsius in central and western India over the next 5 days. The Met has also issued advisory to farmers suggesting chances of adverse impact on the wheat crop as well. Now, heatwave alerts ahead of schedule across the country, pushing stocks of air conditioners makers higher in today's trade. Street expectations of increased AC sales during the summer, helping Symphony lead the pack, gaining 5%, while its peer Voltas rose by 3%. The Food Corporation of India will offload additional 20 lakh metric tons of wheat under the open market to keep prices in check. Now, this is in addition to the 30 lakh metric tons already offloaded. The government is bracing for a surge in power demand this summer. The Power Ministry has mandated imported coal-based power plants to operate at full capacity for the next 3 months. That's starting the 15th of March. Abhimanyu joins us now with the details. Abhimanyu, take us through the government's plan of action and the mandate.
The union government has mandated 15 imported coal-based power plants to operate at full capacity. The government has passed an order under Section 11 of the Electricity Act and has invoked an emergency provision on a request which was made by various states to avert a possible shortage of coal and power in the upcoming summer season. The peak demand forecast for April 2023 is 229 gigawatts, out of which 193 gigawatts is to be met through thermal power stations. It remains to be seen whether the order and its duration will be expanded in due course. If at all, the peak demand forecast is outstripped by the actual demand, and whether states are going to face a similar shortage of coal which they had complained of last year, despite the union government sticking to the stand that there was ample coal available.
Well, Abhimanyu, many thanks for joining us. And straight to the day's trading action. A range-bound session saw the market fail to hold on to its gains. Nifty and the Sensex ended flat with a slight negative bias, while banks fell in line with blue chips. Mid-caps underperformed. That index fell over 0.25%. Reliance lent some support to the Nifty, while IT stocks remained a drag. BSE companies erased a market cap of close to 70,000 crore rupees today. And staying with the markets, we learned from sources that the National Stock Exchange is in talks with market participants on probably extending trading hours for the derivative segment. However, sources add there is no deadline or timeline by which the decision needs to be taken. Prashant is standing by with the details. Prashant, this is not the first time that this is being discussed, but where do we stand as far as taking this forward?
Well, that's right. I mean, this is an issue which has come up over the last 10 plus years. Occasionally it does come up, it gets discussed, but so far nothing has happened. But there is fresh impetus, and that's the reason why we're reporting this. Now, we understand from sources that exchanges, mainly led by the National Stock Exchange, is in preliminary discussion with market participants, brokers, large, small, to discuss this very subject, which is extending trading hours. The segment for which the hours may be extended, which is under discussion, is the equity derivatives segment, Nifty Futures. is what I'm talking about. Now, there is no deadline or timeline by which this has got to be done or this has to be rolled out. So this is a open-ended kind of thing at this point in time, more like getting feedback, discussing it, what's possible, etc. And I spoke to a variety of participants within the ecosystem, and there is widespread acknowledgement that before any decision is taken in terms of moving ahead or not, the tech, the back-end settlement, etc. needs to be in place. Only then you can move forward. Exchanges are also of the view that anything which happens will be gradual in nature, like for example what happened with the settlement process where we moved to T+1 over a period of more than a year. The view which has been expressed, and again this is not new, has been that the current hours lead to volumes moving offshore to SGX, etc., to the Singapore exchange. So why not bring that home, and extended hours perhaps will help with that. The other point which I think many traders would also perhaps agree with is, this allows longer hours, perhaps allows traders and investors to react in a faster way to any global developments which may actually take place. Where does the regulator stand here? SEBI has already sort of passed enabling provisions for this to happen. So technically exchanges have the powers to do this on their own. So in the cash segment, they can go up to 5 p.m. In the futures and options segment, they can go up to 11:55 p.m. As I said, all of this is the preliminary stage, and there is, as I said, no date or so by which this has to be done. Discussions are ongoing, and this is something which we will continue to report and bring to you going forward as well. Back to you.
Yes, we will certainly be discussing this issue. And in fact, starting tonight, you can catch the conversation on whether or not we should extend the trading hours for our markets. That conversation is coming up for you at 10 p.m. right here on CNBC-TV18. Well, staying with the markets, the Adani Group sell-off continues. Stocks have eroded a market cap of close to 20,000 crore rupees today. The fall in the market cap since the Hindenburg report now stands at over 11 lakh crore rupees. In fact, the market cap of Adani Total has eroded by more than 3 lakh crore rupees, slipping below 1 lakh crore rupees as things stand. Now, 6 of the 10 group firms ended in the red today, with Adani Total, Adani Green and Adani Transmission hitting the lower circuit. Vivek is standing by to take us through the stocks and their movements. Vivek.
Well, we are analyzing the price action as far as the Adani Group stocks are concerned, and it's quite clear, the kind of severe price impact that, that particular news flow has had as far as the group stocks are concerned. However, a few of the group stocks have managed to recover from the recent lows and are trading 20% above, in some cases, from the recent lows that they have hit. When you're talking about the individual stocks, Adani Total Gas has been the stock that's taken it or has had the hardest impact in terms of the prices, down almost 75% from the peak. When you're talking about Adani Enterprises, down over 50% and continues to trade at the recent lows that the stock was trading at. When you're talking about Adani Green Energy, down 70%, and there has been no recovery in sight for this particular name. Adani Transmission, similar story, almost down 70%. And continues to trade at the recent lows. Now, coming to Adani Ports, interesting situation here. The stock is down almost 23% from the recent peak. However, the stock has managed to recover almost 25% from the recent lows that the stock saw. Adani Power, around 38% fall, since January 24th. However, from the recent lows, it's gone up by almost 22%. When you're talking about Ambuja Cements, down almost 30% from the recent highs or January 24th highs, but the stock has managed to recover around 6%. NDTV as well as ACC continue to see, sharp correction. Both of these stocks are down between 20 to 25%. Now, some interesting data points coming in some of the cash stocks. Adani Total Gas, now this particular stock has hit the lower circuit for 18 straight sessions, and it's interesting to keep in mind that the circuit limit for these particular stocks has actually been revised from 20% first to 10% and then to 5%. When you're talking about Adani Transmission, the stock hit the lower circuit, again for 13 sessions. Only on one particular day, the stock managed to close at the upper circuit limit of 5%. However, the circuit limit over here too was changed from 20 first to 10 and then to 5. Lastly, Adani Green, this particular stock has hit the lower circuit for 13 sessions. And when you're talking about February 17th, closed with minor gains of 2%. And the circuit limit here too has seen multiple changes from 20 to 10 to 5. So clearly the price erosion has been quite severe, but select stocks have managed to bounce back quite sharply from the recent lows.
Vivek, many thanks. Well, more business news. Kotak Mahindra Bank is reportedly on the lookout for a new CEO to replace founder Uday Kotak. According to a report by Bloomberg, the bank is in discussions with consulting firm Egon Zehnder. Group's president and director Shanti Ekamram and KVS Manian are likely to be the top contenders for the job. Uday Kotak has been at the helm of the bank since its inception and will have to transition from the CEO role following the cap imposed by the RBI on the tenure of the top bank management. Cash-strapped carrier SpiceJet has taken some key decisions. In an exchange filing, the airline said it is considering issuing equity shares on a preferential basis along with the conversion of its outstanding liabilities. The filing also mentioned that the company is considering raising fresh capital via the issuance of securities to qualified institutional buyers. Packaging company Uflex has come under the tax department's scanner. IT officials searching the company's Noida office over allegations of hiding income to evade taxes. Sources say the IT department is probing if the company concealed income via issuance of bogus bills. This is not the first time that Uflex is being searched by tax officials. In 2014, the IT department discovered bogus sales worth 100 crore rupees. India and Singapore have linked their online payment systems to facilitate cross-border transfers. Prime Minister Modi and his Singaporean counterpart present at the virtual launch of the system. India's UPI and Singapore's PayNow users can now transfer money using only a mobile phone number or an ID.
UPI PayNow लिंक का लॉन्च आज दोनों देशों के नागरिकों के लिए एक ऐसा उपहार है जिसका वे उत्सुकता से इंतजार कर रहे थे। इस सुविधा से दोनों देशों के बीच रेमिटेंसेस का सस्ता और रियल टाइम विकल्प संभव हो पाएगा।
Debt vulnerabilities, controlling inflation, financial stability, strengthening multilateral development banks will be on the agenda when G20 finance ministers meet in Bengaluru this week. But one issue that's likely to dominate the agenda is the suffering and disruption caused by the Ukraine-Russia war. Parikshit is standing by with more. Parikshit.
Well, yes, the G20 declaration is likely to strongly condemn the war in Ukraine. The joint statement is likely to highlight the immense human suffering and elevated financial risks caused by the war. The ministers will strongly state that the threat or use of nuclear weapons is inadmissible. Sources say G20 ministers will emphasize that dialogue is vital and today's era is not a war. But it's possible that Russia may not be mentioned in the communique at all, as the G20 works with consensus, and reference to Russia in the context of the war may not go down well with Russia or China. One of the big economic priorities that G20 finance ministers will highlight is the need to press for urgency in addressing debt vulnerabilities, as the global slowdown, inflation and tightening financial conditions may worsen the debt situation in emerging markets and developing economies. The ministers' declaration may emphasize the need for coordination by official and private creditors to relieve debt distress. The meeting will call for swift resolution on debt issues in Zambia, Ethiopia and Sri Lanka as well. The finance ministers will call for agility and flexibility in policy response, use of macro-prudential policies to safeguard against downside risks as well. There will be a conversation on strengthening multilateral development banks as well, and that will figure in the communique too.
Well, Parikshit, many thanks for joining us. It is time for us to head to a break, but up next we bring you a special report on how the lower allocations towards MNREGA in the budget is worrying rural workers. That and more when we return. Airtel has hiked entry-level tariffs in Maharashtra and Kerala. With this, Airtel hikes its entry-level tariffs to 19 out of 22 circles. Entry-level mobile recharge tariffs have seen a sharp jump of 340% in the last 3 years. Bharti Airtel's prepaid plan, priced to 35 rupees in December 2019, now costs 155 rupees. But that's not the same for higher price plans that have only seen 2 tariff hikes in 3 years. Rima does the number crunching for us. Rima.
As you pointed out, Bharti Airtel has gone ahead and raised the entry level, the minimum recharge plan in 2 circles, Maharashtra and Kerala. Earlier, it would cost you 99 rupees to go ahead and recharge your plan at the very least. Now it's going to cost you 155. So this is a big increase of 56%. With this latest tariff hike, Bharti Airtel has rolled out an increase in the minimum recharge plan or the entry-level plan in 19 out of the 22 circles. So a substantial portion, pretty much pan-India. That said, although it's a very sharp increase of 56%, right, 99 to 155, hike, the revenue impact is not going to be very significant. According to IFL, and this is from an earlier note, the revenue impact benefit will be less than 2%. Morgan Stanley estimates it to be at 1.3 to 1.5%. The reason is lower end subscribers don't necessarily top up every month. Two, you could lose some subscribers to competition. Remember, Vodafone Idea has not gone ahead and raised their prices. Their entry level still stands at about 99, 9800 rupees. So some, people who are getting pinched by this increase in tariff hike may go ahead and switch to competition. So on the whole, the revenue impact is not going to be very significant, less than 2%, but it's a step in the right direction. The bigger, trigger for telecom companies in Bharti is going to be a 4G tariff hike or a postpaid tariff hike. Another point to note is that entry-level tariffs have actually gone up very substantially in the last 3.5 years. 3.5 years back, the cheapest plan was 35 rupees. Now the number stands at 155 rupees. That's a sharp increase of 340%. In comparison, the other price plans have not seen such an increase, and one of the reasons could be that Reliance Jio is not present in 2G, so Bharti Airtel has less fear of competition.
Rima, many thanks. Now, telecom service providers and big tech companies are at loggerheads over the issue of delicensing the 6 gigahertz in the 5G band. Big tech companies are in favor of delicensing the band, while telcos believe that delicensing the spectrum could lead to a dip in quality of 5G services. Ashmit caught up with SP Kochhar, Director General at COAI, and asked him about how this tussle will impact both sides.
See, for every entity to propagate their viewpoint is their right. But if you are comparing apples with oranges, that is not correct. If you are comparing, say, the US with a territory like India, now if you see in the US, the N77 band, which is a mid-band, is available. It's available for the telecom operators. In India, it is not available. So our kitty goes down. So what remains as a permanent factor is that 2 gigahertz that we require. You make it up from other bands, fine, but it can't be made up. So therefore, we have to look at the 6 gigahertz band.
Now, in Budget 2023, the government has slashed the allocation towards its flagship rural employment scheme, the MNREGA. That's by 33% from last year's revised estimates. The finance minister defended that, saying that the scheme is demand-driven, and so the allocation will be increased if warranted. But CNBC-TV18 Santiago reports that MNREGA workers believe a lower allocation will lead to suppression of demand and push other existing issues with the program into a corner. Take a look.
Alka Bharat Garil lives with her family in Penkichewadi village in Maharashtra. She and her husband grow ragi and paddy on their 1 acre of land, and the harvest is only enough for their own consumption. This means that they have to find extra work to make money. For the Bharat Garils, the MNREGA scheme has been a lifeline for the past 5 to 7 years. But there are problems. In many cases, the 100 days of guaranteed work has not been forthcoming, and then there's the problem of delayed wages.
I have been working as a MNREGA worker for the last 6 to 7 years. Last year, I worked for 60 days, but I haven't received payment for even a single day.
In Budget 2023, the government has lowered the allocation towards MNREGA to 60,000 crore rupees, 33% lower than FY23's revised estimates, because many rural workers have returned to cities with the pandemic waning. Women are by far the biggest beneficiaries under the scheme, and experts worry that a lower allocation will hurt that section the most.
In a program like NREGA, where more than 50, on an average, where more than 50% of the percentages are being generated by women, an assault on NREGA and an assault on the right to work through suppressed budgetary allocations is a huge assault on the women's right to work in a public program like NREGA.
But the government argues that because demand rose last year, the revised estimate for MNREGA was hiked by 22% to 89,400 crores, and this practice of hiking allocation to meet demand will continue.
MNREGA is a demand-driven scheme. the more people come saying we want the job, we give them the work. So what is stated at the budget time estimate tends to keep adding to its resources or demands based on what comes from states. I need more. Then we add more to it and go to the parliament with a supplementary demand.
The Act guarantees, among other things, at least 100 days of employment to every rural household in a financial year, work allocation within 15 days of a written request by the household, and an unemployment allowance within 7 to 15 days of the request if work is not provided. But experts on the ground say many rural households do not apply for work in writing, either due to inability or because they are encouraged not to. So the demand picture the government is working with is skewed.
The demand that is reflected on the management information system of the NREGA database is not actually a function of the real demand. There is a huge amount of demand that's not even registered on the MISs because they just don't have adequate work and adequate funds to honor that demand through work allocation. So what we are seeing on the management information system is rationed demand already.
Some experts add that with coffers running low, many states are unable to meet their obligations under MNREGA, whether it's providing 100 days of work or paying the unemployment allowance.
Many state governments are not adequately equipped as far as the finances are concerned. This has to come from after the GST began. We have to see that the center allocates its due share to the state governments, and all state governments, by and large, I'm not saying everyone, are starved of funds. So they will try to, try to see that they can cover up that lapse by demonstrating that they have done their job.
Activists also point to workers losing days despite putting in the work because the online attendance model introduced to streamline the scheme has its own set of problems.
The government has said that instead of MNREGA, rural workers are finding employment under schemes like Pradhan Mantri Awas Yojana and Jal Jeevan Mission. It has also clarified that should the need arise, further allocations will be made as the year progresses. But the experts say that schemes like Pradhan Mantri Awas Yojana and Jal Jeevan Mission focus on individual infrastructure asset building, whereas MNREGA focuses on community infrastructure asset building, which has a prolonged benefit for more people. They also argue that these budget cuts send a message that MNREGA is not on the government's priority list. In Palghar, with camera person Vijay Anand, this is Santya for CNBC-TV18.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC-TV18.